Dollarama posted better than expected sales and profit growth in its latest quarter. Comparable store sales grew more than 11%, and the discount retailer is boosting its sales forecast for the current fiscal year as well. For more on the company's results, let's bring in Graeme Kreindler, analyst at NewGen Asset Management. Graeme, thanks so much for coming in.
Thanks for having me, Jacqueline.
So what did you make of these latest results from Dollarama?
So it's an interesting quarter for Dollarama. As you mentioned, they boosted their outlook for the full year, and on a headline basis, the earnings per share beat analyst expectations. I think this is a situation where investors are very, very focused on the forward expectations for Dollarama. It's had 6 consecutive quarters of double-digit same-store sales growth. It's really been a beneficiary of consumer trade down, and Dollarama offering relative value in the form of lower prices for consumers has really benefited from that. So moving forward, the question is whether they can continue to put up this stellar same-store sales growth performance or not.
Yeah, and I thought that was an interesting question that came up on the conference call, too, about the trade down, the benefit that they've seen from the trade down. Does that unwind if there isn't a, big recession or something along those lines, or maybe we get through that, and then after that, what should people be expecting? Do you see the potential for a reversal of the trade down effect?
You're seeing a bit of change in Dollarama's overall mix in the quarter, and that's benefited their gross margins to some extent. Lower freight costs have been a bigger contributor to that. But typically, what Dollarama calls consumables, where grocery-type items would fall into, is in the high 30% of their overall mix. And this has been bumping up into the low 40s for the company. So that's evident in the trade down. I would say within the same-store sales growth trends, their traffic is up double digits. So certainly, whether it's customers shopping more frequently or new customers entering into the fold, they've certainly been a beneficiary there. And I think this will all develop over time with respect to the path of inflation. And whether we've seen peak inflation or not, I think it'll continue to inform how that same-store sales growth figure will trend as we move into next year.
The executives on the call were talking about the competitive environment when it comes to pricing for some of those core consumables. So with that in mind, what kind of an impact could you see on that front, or what are you watching out for?
I think this is a very interesting layer across the consumer landscape where you look at some discretionary items, whether it be electronics, whether that be toys, whether that be mattresses. A lot of these products have pushed price early in response to inflation. And then when you look at food, those prices have been pushed up as well. But what the management team talked about, and I think you'll hear this on some of the grocers' earnings calls as well, is that the actual vendors, the producers of these food items, they continue to push their prices up. And retailers are really reluctant to pass all of that on to the consumer because they want to be sensitive to their own traffic. But there's certainly a limit where if the price for the retailer to buy the product continues to go up, ultimately that's going to have to be reflected potentially in higher prices. And I think what you saw is in 2022, Dollarama introduced new price points from $4.25 up to $5. So there's potentially some wiggle room within this new price point and the overall assortment for them to categorize some of their items within that higher price point to help some of that wiggle room in the dynamic I mentioned earlier.
How common is that for Dollarama to raise the bar on prices like that?
So typically what you'll see is Dollarama will refresh their SKUs in the store about 25 to 30% a year. Now, I think the important distinction is when they introduce new price points, which are typically done once every 6 years, that's entirely new merchandise. So a new price point will bring in things you've never seen in the store before. A refresh that I mentioned that happens every year might move products in and out of the store as well as up and down price categories.
We were speaking with an analyst yesterday about some of the Chinese e-commerce sites, Shein and Temu, and he was saying that there's a possibility there that there could be some competition for Dollarama because it's similar price ranges. Of course, there's the immediacy of walking into a Dollarama and buying something and having it in your hands right away, and then ordering something from China that needs to get shipped and it takes maybe a week or two to get there. Do you see that as a potential source of competition, though, for Dollarama?
I think if you're looking to shop on price, some of these new entrants certainly provide a very low-cost option for a good that you're looking for. If you're looking for something more specific, that's something that we'll have to see over time, how these websites can deliver on that proposition, what's the quality like, the immediacy of that delivery. So I think the idea is that across the consumer landscape, there is more competition and there is more options in terms of catering to relative value and lower price points. I think it's also interesting that potentially is this a time where we've seen really the getting closer to the end of the consumers feeling the pressure, and maybe there are some other areas where they might be looking to purchase items that have been out of favor in the last 12 months. And maybe some of these lower end websites actually offer some relief in some areas, which free up some spending in others.
So when you're looking at Dollarama's stock, it's trading near all-time highs. What sort of potential do you see there?
This is one of the best performing consumer discretionary stocks this year. It's up 25%. The price to earnings multiple on Dollarama is close to its highs in the high 20s. This is a stock that normally trades in the mid 20s, and it's really predicated on consistent growth that they've been able to put up year over year. So I think what this comes down to is if Dollarama can continue to deliver on above expectation growth, it could support its multiple. But if it's not, I think there's other areas of the market where you're seeing discretionary companies trading at half the multiple of Dollarama or more. And maybe there's a potential there to cycle into those names and capture an appreciation off the back of some of Dollarama's really strong performance here.
Well, we're